Hi folks, we're looking at Module 6, Novice Problem, and this is a solution for problem number 1. In this module, we're talking about models and building models that will be helpful for analysis. We've built models before. We've spent a good bit of time understanding how to build them and what's necessary. We're going to now take them to the next level and try to see how we can create approaches to doing sensitivity analysis. And by that, I mean the changes in parameters for these models and how that affects some important calculation or value in the model. We're going to look at, first of all, at a very simple income statement. Income statements have a top line, they have a middle, and they have a bottom line. Top line is the revenue. The middle is all of these expenses and costs that outflow from these revenues. So we've got an inflow of $600,000. We've got a calculation of a cost of goods sold to be approximated as 50% of the cost of the revenue. So these are assumptions. These are ways that we can model that make some sense. We may want to change that 50% to something other than 50% at some point in time, and we will. So then we calculate a gross profit, the difference between revenue and cost of goods sold. Then we have a variable cost, and this is 20% of revenue. You can see here 20% of revenue. We've got a fixed cost that's a number that's given to us, 100,000. Here's our operating expenses, the sum of variable cost and fixed cost. I subtract that from gross profit, and I get net operating expense. And then we calculate an interest. This is also a number that's given to us. Interest expense. Here is our earnings before taxes. So when we subtract 20,000 from 80,000, here are earnings before taxes. Then we have a formula that we use to calculate taxes, which says essentially that if our earnings before taxes are positive, that means that they're non-zero or less. Then we multiply the tax rate, 34%, times that value. Otherwise, make it zero. We don't want to pay negative taxes. So here's the bottom line, and this is going to be the value of importance in this model. So the problem asks us to build a two-way table that's going to vary a couple of important values in this calculation. One is going to be revenue, the other one variable cost. From 100,000 to 1 million for revenue, from 100,000 to 240,000 for variable cost, and then calculate the values of the corresponding bottom line as a result of those changes. Then later I'm going to add a scroll bar to see what, if we can get a third variable in there to change, to see what the differences might be in our bottom line. So how do we create a data table that allows us to calculate all these values in here that are going to be the bottom line, the golden cell that we saw over here, the calculation of importance, by changing variable cost and revenues in our model. The way we do that, as we've done before, is to create a two-way data table. Here's my table. I grab the table, and in the upper northwest corner of the table in Seattle there, I've got my golden cell. I then go to data. I go to the what if box. I select data table. It asks me a couple of questions. What's your row input and what's your cell input? My row input is this variable cost. The column input is going to be this revenue. So let's go to the original calculation to see where our variable cost is. Our variable cost is located right here. Next, we give it the column input, which is revenue, and revenue, of course, is here. I hit OK, and let's see what's happened to our table. Here's our table. It's populated with values, kind of hard to tell. So I'm going to do a conditional formatting here to illuminate the cells that are negative. So I go to conditional formatting, I go to new rule, I go to format only cells that contain less than or equal to 0. I'm going to turn them a color. Doesn't really matter what color, but let's go to format. to fill, I want to make them kind of reddish or orangish. I hit OK, and there we are. The next question is, and you can see these are all losses here, and these are all gains, depending upon the value of revenue, the value of variable cost. Now I'd like to be able to change the interest expense also, and add a third variable to these two variables that we'll see here. And we're going to do that by adding a scroll bar. So I'm going to put my scroll bar here. I've got a scroll bar in my quick access menu, but you can also go to the developer. You can go to insert, and you can go here to scroll bar. I'm going to put my scroll bar here. I want to change these values at the scroll bar from 10,000 to 70,000 in 5,000 unit increments. Remember that the maximum changes in a scroll bar from 0 to 30,000 in integer increments. So I'm going to have to think of a way of multiplying these values so I can get the right numbers, because 0 to 30,000 obviously does not cover 70,000. So I'm going to right-click this and Format Control. I'm going to enter the low end 70 here. I'm going to use a multiplier of 1,000 in a little while, and I'm going to use, I'm going to use 10 here. That's 10 on the low side, and this is 70 on the high side. And I'm going to go in increments of 5 or 5,000 after I multiply it by 1,000, and I'm going to control this cell right here. So let's hit OK. There's my value. Now what I want to do is I want to take the interest expense and turn it into a formula that says take this value, multiply it times 1,000 to make the variation that we'd like. With 10 here I get 1,000 there. With 15 here I get 15,000 there, and the like. So if I go back to my table, you can see what happens with the table as I'm changing my values in the, I want to move this over a little bit so you can see it. As I change the scroll bar and change those values of interest expense, you can see the changes that occur in the table. As interest expense gets higher, there are fewer and fewer values that are positive, and eventually I get to the end where I'm 70,000, and this is what you see. Obviously it'll move in the other direction as we're lowering interest expenses. And there we have it. We have three-way control. The variable cost we can see in this matrix, revenue in this matrix, and also the interest expense that is shown by changing the values with a scroll bar. Very convenient way to be able to control variables and to ask those kind of what-if questions that are very important in sensitivity analysis. That concludes problem 1 and module 6.